With passive income, you can have money coming in even as you pursue your primary job. Or if you're able to build up a solid stream of passive income, you might want to kick back a little. Either way, a passive income gives you extra security. And if you're worried about being able to save enough of your earnings to meet your retirement goals, building wealth through passive income is a strategy that might appeal to you too. Today, I'm going to show you 7 easy ways to make passive income online. Before the start of the video, make sure to leave a like, and if you want to see more content, subscribe to our channel. Let's get started. Number 1. Selling information products. One popular strategy for passive income is establishing an information product, such as an ebook or an audio or video course, then kicking back while cash rolls in from the sale of your product. Courses can be distributed and sold through sites such as Udemy, Skillshare, and Coursera. Alternatively, you might consider a freemium model, building up a following with free content and then charging for more detailed information or for those who want to know more. For example, language teachers and stock picking advice may use this model. The free content acts as a demonstration of your expertise and may attract those looking to go to the next level. Information products can deliver an excellent income stream because you make money easily after the initial outlay of time. Quote, "It takes a massive amount of effort to create the product," Tresidder says, "and to make good money from it, it has to be great. There's no room for trash out there." Tresidder says you must build a strong platform, market your products, and plan for more products if you want to be successful. Quote, "One product is not a business unless you get really lucky," Tresidder says. The best way to sell an existing product is to create more excellent products. Number 2. Rental income. Investing in rental properties is an effective way to earn passive income, but it often requires more work than people expect. If you don't take the time to learn how to make it a profitable venture, you could lose your investment, and then someone, say John H. Graves, an accredited investment fiduciary in the Los Angeles area and author of the 7% Solution, you can afford a comfortable retirement. To earn passive income from rental properties, Graves says you must determine 3 things: how much return you want on the investment, the property's total costs and expenses, the financial risks of owning the property. For example, if your goal is to earn $10,000 a year in rental cash flow, and the property has a monthly mortgage of $2,000 and costs another $300 a month for taxes and other expenses, you'd have to charge $3,133 in monthly rent to reach your goal. And economic downturns can pose challenges too. You may suddenly have tenants who can no longer pay their rent, while you may still have a mortgage of your own to pay. Or you may not be able to rent the home out for as much as you could before, as incomes decline, and home prices have been rising quickly of late due in part to low mortgage rates, so your rents may not be able to cover your expenses. You'll want to weigh these risks and have contingency plans in place to protect yourself. Number 3. Affiliate marketing. With affiliate marketing, website owners, social media influencers, or bloggers promote a third party's product by including a link to the product on their site or social media account. Amazon might be the best known affiliate partner, but eBay, Awen, and ShareASale are among the larger names too. And Instagram and TikTok have become huge platforms for those looking to grow a following and promote products. You could also consider growing an email list to draw attention to your blog or otherwise direct people to products and services that they might want. When a visitor clicks on the link and makes a purchase from the third-party affiliate, the site owner earns a commission. The commission might range from 3 to 7%, so it will likely take significant traffic to your site to generate serious income. But if you can grow your following or have a more lucrative niche, such as software, financial services, or fitness, you may be able to make some serious coin. Affiliate marketing is considered passive because, in theory, you can earn money just by adding a link to your site or social media account. In reality, you won't earn anything if you can't attract readers to your site to click on the link and buy something. Number 4. Flip retail products. Take advantage of online sales platforms such as eBay or Amazon and sell products that you find at cut-rate prices elsewhere. You'll arbitrage the difference in your purchase and sales price, and may be able to build a following of individuals who track your deals. You'll be able to take advantage of price differences between what you can find and what the average consumer may be able to find. This could work especially well if you have a contact who can help you access discounted merchandise that few other people can find. Or you may be able to find valuable merchandise that others have simply overlooked. Number 5. Peer-to-peer lending. A peer-to-peer loan is a personal loan made between you and a borrower, facilitated through a third-party intermediary such as Prosper or Lending Club. Other players include Funding Circle, which targets businesses and has higher borrowing limits, and Payoff, which targets better credit risks. As a lender, you earn income via interest payments made on the loan, but because the loan is unsecured, you face the risk of default, meaning you could end up with nothing. To cut that risk, you need to do 2 things. Diversify your lending portfolio by investing smaller amounts over multiple loans. At Prosper.com and Lending Club, the minimum investment per loan is $25. Analyze historical data on the prospective borrowers to make informed picks. It takes time to master the metrics of P2P lending, so it's not entirely passive, and you'll want to carefully vet your prospective borrowers. Since you're investing in multiple loans, you must pay close attention to payments received. Whatever you make in interest should be reinvested if you want to build income. Economic recessions can also make high-yielding personal loans a more likely candidate for default, too. So if COVID-19 or one of its variants causes further harm to the economy, these loans may go bad at higher than historical rates. Number 6. Dividend stocks. Shareholders in companies with dividend-yielding stocks receive a payment at regular intervals from the company. Companies pay cash dividends on a quarterly basis out of their profits, and all you need to do is own the stock. Dividends are paid per share of stock, so the more shares you own, the higher you pay out. Since the income from the stocks isn't related to any activity other than the initial financial investment, owning dividend-yielding stocks can be one of the most passive forms of making money. The money will simply be deposited in your brokerage account. The tricky part is choosing the right stocks. For example, companies issuing a very high dividend may not be able to sustain it. Graves warns that too many novices jump into the market without thoroughly investigating the company issuing a stock. Quote, "You've got to investigate each company's website and be comfortable with their financial statements," Graves says. You should spend 2 to 3 weeks investigating each company. That said, there are ways to invest in dividend-yielding stocks without spending a huge amount of time evaluating companies. Graves advises going with exchange-traded funds, or ETFs. ETFs are investment funds that hold assets such as stocks, commodities, and bonds, but they trade like stocks. ETFs also diversify your holdings, so if one company cuts its payout, it doesn't affect the ETF's price or dividend too much. Here are some of the best ETFs to choose from. Quote, "ETFs are an ideal choice for novices because they are easy to understand, highly liquid, inexpensive, and have far better potential returns because of far lower costs than mutual funds," Graves says. Another key risk is that stocks or ETFs can move down significantly in short periods of time, especially during times of uncertainty, as in 2020 when the coronavirus crisis shocked financial markets. Economic stress can also cause some companies to cut their dividends entirely, while diversified funds may feel less of a pinch. Compare your investing options with Bankrate's brokerage reviews. Number 7. Create an app. Creating an app could be a way to make that upfront investment of time and then reap the reward over time. Your app might be a game or one that helps mobile users perform some hard-to-do function. Once your app is public, users download it and you can generate income. An app has huge upside if you can design something that catches the fancy of your audience. You'll have to consider how best to generate sales from your app. For example, you might run in-app ads or otherwise have users pay a nominal fee for downloading the app. If your app gains popularity or you receive feedback, you'll likely need to add incremental features to keep the app relevant and popular. Thanks for watching, guys. If you enjoyed this video, smash that like button, subscribe to the channel, and turn on post notifications to see more of our future videos. With that said, keep enjoying our videos, and I'll see you in the next video.